Hey, how's it going, everyone? Dennis here from primedtraders.com. Now, in this video, what I want to talk to you guys about is one way of, well, specifically the way we trade. One of the main components of our trading strategy is, of course, the complete entry system. It tells us exactly when to enter and exactly when to exit. I want to go over the current trades I'm writing, which is gold short, which is already locked in, and a DAX as well, which I've taken here, even though we seem to have a support over here. I'll explain to you guys exactly why I think that there is a good probability of price action continuing down. But for that, I need to go to TradingView and explain it in detail. Now, the basic component of our trading strategy and the way we trade is we trade two types of trades. Momentum, which is directly trading with the trend, is number one. And number two, it's a classic reversal pattern, which we would use when price action establishes and gives us indications of a reversal in the market. Now, that is created for selling when price action creates a lower high. And you take other information into account. I'd love to go over, for example, gold and just show you this from yesterday. It's much easier on the tick charts. I do use tick charts on trading on CTrader. Tick charts actually help out drastically in finding the right entry. So I'm going to compare this here for you. So there's the bear trend. It's pushing towards the downside. Essentially, what I'm targeting is a support level that I've dotted down here, down there, and I'll explain to you guys soon. But I just want to go over the actual process. So when price action creates momentum, and that can be seen, for example, very easily on the 30-minute chart. The only thing you're looking for is where is price action creating its lower highs. And if the recent price action is pointing towards the downside, what I'm going to do is I'm going to start looking for potential short ideas. But at the same time, I'm not going to just blindly focus on pushing towards that downside. But when the market gives me opportunities, I will enter. For example, you can see here a trade. I took a short over here, right here, took a take profit over here. Now, why did I do that? One of the main reasons was the short-term chart, but you can see I'm using ticks over here. I've taken the bottom and the top. I had myself my 54.61 level of the fibs, just as I do here, from this top to this bottom of the recent swings of price action. We seem to have come to a decent support, and this is why I'm short DAX, by the way. And then if you really pay attention to price action, I'm just going to snip it for you. If you really pay attention to price action, what does this here line up with? We clearly see price has used this recent level as a support, right? We had a bit of a rejection over here, and here's a straight line of the Dow chain channel telling me that the recent movement here was, in fact, another key level, which was broken. And you can see that here, right there. That level was a direct support resistance level. So if I take the closing areas of this chart here, you see that 30 would line up there, which means my stop loss is right above that. Momentum is down, and if I take the spikes down here, you guys can see, or even the close over here, you clearly see that it lines up with 54.61, and there's my entry. Price came to that level, boom, short. Tight stop loss, wider TP by targeting the overall momentum and the key level. Now I've removed that key level and I've started focusing on the next one, which is down here. And this is a pure momentum trade. So is the DAX. So is the DAX. What we see is price action creating lower high, lower high, lower high, lower high, and it's all coming down to a decent support. Now, the only difference between this, I need to change this to bearish momentum. The only difference between the tick charts and the time charts is that tick charts are based on actual data, while the the normal candlesticks, they're based on time. So I prefer the other ones much more. My CMO indicator, the Shanday momentum indicator, is increasing in momentum towards the bearish side. And if you guys take a look at the DAX, for example, here, you see a pretty decent support, but the main criteria of this support is that all of my highs are actually getting lower. In this case, I would expect price to break out soon. The POC level for the day is right there, telling me that there is a lot of momentum right there, and I really believe there is going to be a breakout. But the main point as well is like, so where do you ride that, right? So that is a question that needs to be answered. And if you guys check here, we clearly have a bit of a support resistance level going on. Let me just grab that properly. There you go. And price action. I always get the peak, so the top and the closing areas. So if this breaks, like what are we looking at next? Like what could be that next demand support resistance zone? Clearly we got one here. If you guys take the top side of the Dow chain channel, you'll see that price has used support, resistance support. So that could be it, right? 14,429.9. And I'm just going even lower here because I'm targeting the next level. And that next level would be down here. This support level right there. So I'm thinking that if this breaks out, with especially everything that's going on with the 10-year and the 30-year yields and bonds or whatever if they're called, I would expect further more pressure here. And you guys can see it clearly, that's how. So for me to add an asset to my watch list, aside from checking the news, like actually seeing if there is news coming out today, that's one way to put an asset into my watch list and trade it. But the overall criteria is price action. Where is it going? And I use the basics of it, like highs and lows. That's it. Nothing else. Highs and lows. Excuse me. Now, check this out. Resistance, 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 resistance. Whoop, lower high, lower high, lower high. Boom. All of these lower highs are indicating to me that momentum, at least for the short term, has changed. Since I'm a day trader, I honestly don't care where price will go tomorrow. I just care where is it going right now and where could it go. So if something's going down, an object in motion tends to remain in motion until acted upon by outside force. I will continue to be bearish as long as my highs are getting lower and my lows are getting lower. Quick recheck. I use TradingView. I set up my other screen on a 4 or an 6 or even an 8 view chart, depending on how many assets I have in my watch list. And then I just focus on that. And whenever there is an upswing in one of those, like this, if there is an upswing in price action, if the momentum is down, if price pushes a little bit up, what I'm going to do is come down to my short-term charts and I'm going to see what's going on, like what's actually happening here. So if I come to the 2-minute here, you guys can clearly see that the breakout could be occurring in this or the next or the candle after it. Why? Because price action is creating lower highs. It's trying to go up, but it can't. So all it needs is one little break, and that's it. I know this educational post is nothing fancy, but I think it can help you. It helps me, and it explains directly the way we trade. So if it helps you in that way, my mission here with this video has been successful. Thanks for watching, and make sure you check out our signature. I'd love to see you with us. Take it easy, and good luck trading. Happy Friday as well.